Hey guys, thanks for joining us here in the charts. This is the Market Beast. I'm a little nervous about this video because this video will be challenging many who say that you cannot and should not buy stock or invest in a company just before earnings. Okay, this is going to be my very first documented earnings call or play rather. We are invested. We're expecting a move in a specific direction, and that's what we're going to explore on this video. Make it short and sweet. So let's get into it. Welcome back, loyal family. If you're new here, we only explore price action and take risky plays into earnings. Welcome to new subscribers. Let's go ahead and dive right into the charts here. So today's January the 6th, 2022, and the current price of ACCD is going to be $22.66, slightly negative 3.4%. for the day. Okay. All right, guys. So keep in mind, I have no clue what this company is, so please kindly do your research. We'll post this video out just before the market closes, and it's going to be interesting to see how this ages. Here's my prediction. All right. So it won't necessarily have to be positive earnings. Like if you're looking on the screen, you're saying, okay, so the earnings must be positive. It's actually preferred that the earnings are positive to get a boost higher, okay? But I'm just predicting the trajectory here. So the main focus on this video is to understand that I'm predicting the trajectory, not the actual, positive or negative earnings, okay? But I do think it may be helpful for this potential move higher. The positive target, I probably shouldn't have put positive earnings. Positive target is going to be $28 within less than 24 to 48 hours. Assuming that this stock stays, there's two requirements for me for this to go well. All right. And again, we're already invested. We've already pulled the trigger. We're in right here, right now. I'll give you the risk to reward here towards the end of the video. It must stay red all day, which I think it will. And it must close a daily candle above 2170. Those are the only two requirements that I require, or for me to have a better understanding, not necessarily a requirement, but for me to have a better understanding whether or not we'll have a push higher within 24 to 48 hours, 2 market days. Those are the two requirements: close and red all day. Okay, close 2170 and red all day. All right, so I'm super anxious to see how this plays out because this is gonna go very well or not so good, right? Let's do the risk to reward very quickly. Wrap the video up. So this is not financial advice, but if you were to actually take a risk in this market and just make sure it's a 3-to-1. So that means that if you were to actually enter exactly where the market is right now, or just below it there, I'm trying to get it as precise as I can. The markets are open, so it's fluctuating. 3.05 risk to reward ratio, assuming that you enter here. Your stop out would be closer, just approximate numbers, guys, $20.83, and the price target will be 28.01. Okay, so that's how you basically would set it up. You have your stop loss, you have the entry, like right now. Again, we've already entered. We have a stop out. I've already given you that price target, 3-to-1, and that's the strategy. If you don't have a strategy, that's exactly how I would play this market. I'm actually playing it a little bit different. My stop out is it's well below the price. But so I just want to give you guys that 3-to-1 and super risky play, dangerous call, earnings call, something like that, as the title suggests. That's basically what I have for you guys. And if you enjoyed that, and if this ages well, let me know in the comment section. If it doesn't age well, I mean, you can say it in the comment section. I already see it doesn't age well. So if you want to say it didn't age well, thank you for sharing. But yeah, I know it didn't age well. I see it on the screen. All right, guys, take care of yourselves. Remember to always have a plan. This is a sneak peek or the practical way to enter the market. Again, always have a 3-to-1 risk to reward ratio if ever you're buying into stock, and always risk the same percentage of your portfolio. Have your daily risk understood. That means if you can only stomach $100 risk per day, 1,000 risk per day. I'm not sure how large your guys' accounts are. Always stick to that every single day. Never lose more than your daily risk, your maximum daily risk. Okay, I guess for an example would be like if you have a $25,000 account, a risk of 1% per day would be $250, meaning that You should not be losing more than $250 per day on a $25,000 portfolio. Okay, hopefully that makes sense. All right. Again, keep that positive energy flowing, guys. We'll talk soon. Bye for now.